Chris Roberts here, and welcome to the ultimate guide to investing in multifamily apartment syndications, Module 4. Investing in a real estate syndication. All the details. Before you're hopefully committed to and after you've become interested in a real estate syndication, you need to know several details about actually investing in these deals. The process of investing in real estate syndications is very different than picking a stock or mutual fund online. Furthermore, unlike typical investment properties, there are hold time barriers to entry and a whole lot of expectations that you need to know about prior to committing to a deal. As a smart investor, you've got to know exactly why you're choosing a particular investment in addition to the required credentials, the process, what's involved, and how long you should expect to wait until you get your payouts. Guess what? You're in luck. That's precisely what you're about to read. How long does a real estate syndication last? Unlike an online stock, ETF, or mutual fund that can be exchanged daily or more, real estate syndications come with a required projected hold time. While each real estate syndication is different, we typically see hold times of 5 to 7 years, sometimes longer. Real estate syndication deals have to allow for property renovations, management changes, occupancy rate increases, and even market conditions to adjust. This means that you should plan to invest your capital for at least 5 to 7 years, or the timeline stated on the investment summary and memorandum, because you're not going to be able to take that money out until after the asset's sold. Who can invest in real estate syndications? Now, you might be wondering if there's any red tape. Is just anyone allowed to invest in this sort of thing? It seems pretty exclusive. Well, you're kind of correct. A large majority of real estate syndications are open to accredited investors only, though some are also open to non-accredited or sophisticated investors who can demonstrate that they understand a real estate syndication and the risks. In order to be considered as an accredited investor, you must meet at least one of two requirements. The first is you must have at least $1 million in net worth, not counting your primary residence. You must make $200,000 a year as an individual or $300,000 jointly with your spouse. You must have made this amount for more than 2 years, and usually the last 2 years, and intend to make this amount more than the current time stated. If you meet either or both of these requirements, then you are an accredited investor. If you're not yet an accredited investor, there still are some real estate syndication opportunities out there for you. However, you may need to look a little harder for them. This is because the opportunities for non-accredited investors can't be publicly advertised, hence the feeling of secrecy you're getting. What's the process for investing in a real estate syndication? So maybe you're accredited, or maybe you're not. But you're really wondering how someone invests in these exclusive real estate syndication deals you're reading so much about. Here are the basic steps for investing in a real estate syndication. The sponsor announces that the deal is open for funding, usually via email. You review the investment summary deck and decide to invest. You submit your soft reserve telling the sponsor how much you like to invest. The sponsor holds an investor webinar where you can get more information and ask questions. The sponsor confirms your spot in the deal and sends you a PPM, called a Private Placement Memorandum. After signing the PPM, you wire in your funds or send in a check. The sponsor then confirms that your funds have been received. The sponsor notifies you once the deal closes and lets you know what to expect next. Real estate syndications are almost always filled on a first-come, first-served basis. Thus, sponsors use a soft reserve form to help them determine who's interested in investing. By submitting a soft reserve, you are telling the sponsor you're interested in a deal and you want to invest X amount. The soft reserve does not guarantee you a spot in the deal, nor does it lock you in. You can always back out and change your mind later. Pro tip: if you're thinking about investing in a deal but aren't sure whether you can invest $50,000 or $100,000, go ahead and put a soft commit in for $100,000. This holds your spot in the deal. And if you decide later that you only want to invest $50,000, you can easily decrease your investment amount. However, if you had put a soft reserve for $50,000 and later wanted to increase it to $100,000, you might not be able to increase your soft reserve amount if the syndication is already oversubscribed. What happens after I invest in a real estate syndication? So you're sure you want to invest in a real estate syndication. You do your research, you lock in your deal, now what? After you've sent in your funds for a real estate syndication deal, your active participation is done. Now you can sit back and wait for the cash flow to start rolling in. Depending on the particular deal, you may receive either a monthly or quarterly cash flow distribution, and they may start immediately or not for a few months. Regardless, you should start receiving monthly updates as soon as the deal closes. These monthly updates will include information on the latest occupancy, the progress on the renovations, and several other factors. Every quarter you will receive a detailed financial report on the property, and every spring during the tax season. You will receive a Schedule K-1 for your taxes, which will report your shares of the income and losses for the property. As your projected hold date approaches, the monthly information you receive may include information about a sale. Once the asset sells, you can expect your original investment capital to be returned, plus any percentage of the profits due to you. Now you're in the know. At this point, you've gone from curious to interested to knowledgeable about passive investing in real estate syndication deals. All that's left to do from here is to actually find a deal and get involved. You're fully informed about who can invest, the hold times, the process, and what to expect. Plus, we're here for you to answer any questions and guide you along the way. Have fun investing.